Happy Sunday, everybody. Hope this finds you well as we prepare for the next week. This is Mornings with Michael. This is for information, entertainment, and educational purposes only. And I want to share my screen. I got a little presentation to share with everyone. Just be a moment, get the presentation on the right page, and we'll get her started. So right here, this is a heat map. This is a heat map from last Friday. Looks like technology. The two areas that have been shining forth the last few days have been technology, semiconductors, and communication. Those have been leading the charge. It was interesting that they tried to sell off Nvidia. Nvidia just wouldn't go down any further. So it actually recovered. It was at one time it was down a little over 5%, and it came all the way back. So it had Nvidia has been doing well, and AMD had a good spike, and some of the software CRM, WDAY, Workday have been doing well. So the Nasdaq has these top components that are doing well. The Nasdaq, there's a little diversion. The S&P 500 is the Dow, and the small caps are all down while the Nasdaq is up. Of course, the Nasdaq doesn't have any banks in it, and we'll just have to move forward and see how all this shakes out. Morgan Stanley stopped strategist says bank failures mark the start of a vicious end to the bear market in the U.S. stocks. I tend to agree with this. I believe we're not going to have the end of the bear market until we see a capitulation. And I'll show you later where in June, all the traders are expecting the VIX to move and vice versa. That's going to, if it hits those marks, the S&P 500 is going to have a sharp pullback or sharp fall. So let's take a look at the Federal Reserve tightening. This is the third highest peak in tightening in history. The only ones to outshine it are this one in June of 04 and no, December of 72, it looks like. Yeah, December of 72 and March of 83. And if we take a look at the discount borrowing window, this is peaked and significantly outshines the 2008 borrowing window, 2008, 2009. So we're 152.85 billion banks are going to borrow from the discount from the Federal Reserve. So this is the math. We have $18 trillion in deposits and 125 billion in deposit insurance fund. Something just doesn't match up here. So we'll have to continue to watch this and see where it goes. Our leaders have let us down in more ways than one. Anybody can see that their 401ks have just been dissipated. This government has totally put our economy in shatters. There's no protection at the border. Opioids are coming over unabated and killing our youth and our citizens. This is just terrible. Look at this. We deny that U.S. sabotaged Nord Stream pipeline. That was wrong. And stocks are higher after the Fed rate says there's nearing an end to stock market. The only reason they're nearing an end is because we have a banking crisis. If we didn't have a banking crisis, it's pretty well estimated that interest rates would move up to at least 6%. The Federal Reserve now believes its work is nearly done. We need a little luck. This is from Moody's Analytics. So we'll see if we get that luck. That's not the best thing to be hearing from our leaders who are in charge of raising interest rates. The Federal Reserve is trying to walk a tightrope in a hurricane. Will they be able to pin this tightrope through the needle? That's a big question. And the UK is now sending depleted uranium shells to the Ukraine, which is tantamount to using a dirty bomb. So we'll continue to watch that. Now we get to our markets. We have, it looks like a slightly bullish Harami here. Volume is about the same. We have looks like we got an angle up here, a slight angle here. So there's a possibility that the Dow could go up slightly more before it starts to pull back. Take a look at the IWM, the small caps. Small caps had a big sell-off, and once again, a bullish Harami. The volume is okay. It's pretty close to what we were on the sell-off here. So I think small caps could trend a little higher. Actually, futures are up right now, projecting what's going to happen tomorrow. Here's our spiders. Spiders also have a bullish Harami. This is the stochastics is trending down and the CCI is heading up. So we'll just have to see. We have a little bit of a divergence there. See which one which way these things roll. And here's the VIX. The VIX has a pullback. I still think the VIX is going to head up to 30. We'll just kind of see what news we get out of the banking crisis and see how the markets go. It's had a pretty strong pullback, and now let's take a look at what traders are putting their eyes on. This is June. In June, the biggest trade interest is at 30. We got 423,500 contracts, and at 40. So a lot of traders are thinking we're going to have a capitulation in January, big sell-off. So 415,200 contracts on June. So we'll just see if we get there. I think there's the market is in a rally mode right now, but I think there is a big chance for pullback as we really try to evaluate what kind of recession we're going to get. So we'll just stay tuned. That's our report for today. We'll be back at live market action tomorrow. This has been Mornings with Michael for information and entertainment purposes only. We hope you have finished your weekend in style and start the weekend off on a bang. Hope everyone does well.